Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again in euro currency. On the daily chart we do not see a lot of activity. Yesterday euro has shown a bit higher action, mostly due to the United States dollar weakness, because as you know, yesterday was the Fed statement and we announced it in our weekly report, so it could become important. And well, Jerome Powell said mostly the same, is that the situation in economic activity and in employment stands far below the levels in the beginning of the year, and it was relatively diverse statement that has pressed on the United States dollar, especially on the background of the virus situation that becomes worse in the United States, and that had led euro to move slightly higher. As we mentioned in our weekly reports a few times, guys, dollar right now stands in all-time confidence resistance around 105 area. So depending on what will happen around this level, we will see overall reaction on the markets, and it could be really decisive turning point for United States dollar, depending on what will happen. At least some reaction to the downside should happen, and it already stands underway as euro is climbing higher. The mirror picture you could see on United States dollar on the quarterly chart, even on the monthly chart, you could see it. So, how it could make impact on the euro currency? On the euro currency, it's a bit, it's a bit tricky situation because markets strongly overbought, deeply overbought on the weekly chart. And in these conditions, markets really very difficult to continue upward action. It's trying to creep high, but it's not very successful currently. Because on the daily chart, mostly it stands in the cluster of our target. We specified it again in the weekly report, and the market has hit it. And now it approximately stands in the same range as the candle that has been reached this target. You can see, yesterday it was slightly high action, now it's returning back down in the same range. At the same time, on the background of the Fed statement and on the technical picture, take a look what we have. On the weekly chart, if you remember, next our resistance, as we said, is 1876, is 618 level. You can see how strongly overbought euro currency here. And now is, thrilling moment stands around this level, whether market will creep right to this target or not, because combination of the overbought with the next fib resistance definitely will be deadly combination, and some pullback definitely will happen. But currently it's a question whether market will reach it or it will start retracement right at this area. Because major targets already has been hit, and here we could add some minor targets, additional targets that we have. For example, this ABCD pattern that has the target 1866. You also could draw different from this point, from this low to this top, and say ABCD pattern, but it already will have the 1960 target. Well, and today, as you know, it's a big day of the gross domestic product release. So today we have the unemployment in Germany. We have the preliminary data for second quarter gross domestic product in Germany. We have preliminary data, second quarter gross domestic product in the United States. So that could be really tough statistics that could make impact on the markets. That's why I suggest that it would be better to not take any bearish steps until statistics release and until we will not get the clear bearish patterns on the lower time frame. So here it's great that we have the overbought, it's great that we have some extensions coming weekly fib level, but on the hourly chart, in fact, on the 4-hour time frame chart as well, you would not see yet bearish patterns. High highs and high lows tendency stands on the market. Here we have the first hint that's probably this could happen. You may see the divergence. Butterfly has been formed, but we do not have yet reversal to the downside swing. We need to get lower lows that could put the foundation, put the starting point for possible retracement. Once we will get it, that will be relatively safe to consider taking the short position and just wait for a clear pattern to take for possessing yourself onto the downside. But that is only for those of you guys who trade the retracements, who trade on intraday charts, who would like to take the short position on EUR. Of course, it's not a good idea if you trade on a daily and weekly chart, because it's very strong momentum to the upside, and the overall context is bullish, and you could trade bearish, but to the downside, but that will be very short-term trade, and mostly it has relation to the intraday steps. On the daily chart, it makes no big difference whether we will get the bearish pattern or not, because anyway we will wait for a pullback for take the long position. Here on the daily, we consider the same setup as we said. Good thrust up, maybe it will be bread and butter. If it will be in bread and butter, we consider taking the position based on this most recent swing. That's our major trading plan. It's still valid. Here was also we are waiting for a harmonic swing, as we said 2 days ago. So on the daily chart, nothing has changed. Now it's just the technical question: where the retracement will start and how it will start. Currently, market is ready for retracement, but the overall background supports euro, better to say, makes pressure on the United States dollar, and that doesn't let euro to start the pullback. So maybe gross domestic products will change the overall situation. Let's see what we will get today.